I'm always curious about when talking to entrepreneurs who have raised a lot of venture capital. Metadata raised $40 million in March of 2022. This is obviously a loaded question. It might take you a long time to answer, but you can give me the Reader's Digest version. What was that process like? What are the biggest challenges of being well financed and having an aggressive growth mandate?
Oh man, I can't talk about this for years. I used to not like raising money because, first of all, it doesn't feel good to ask for money. Two, it doesn't feel good to be rejected dozens of times. And while you are in that process, they point out every possible weakness you have in your company and in your personality. So I used to just fucking hate doing it. It was not my kind of action. But you know what? Thankfully, God sends you challenges that you can overcome. That's at least my perception in life. And everything, especially the shit, is a blessing. And indeed, it was because it made me grow in a stressful environment. It made me grow because of that pressure cooker. And you ask about the Series B, so I'll answer that specifically. It was a delight raising the Series B. Because by the time I got to raise the Series B, the company KPIs were great. It is not my first rodeo. I knew that the vast majority of the advice I got, just like many of the copy paste advice you get from the industry, is bullshit. Don't ever say what valuation you want. BS. You should absolutely say what valuation you want. Otherwise, no one knows and no one can aim and agree way ahead of time. Running a process, learning how to say no to the wrong investors, learning how to raise money from existing investors so that you are in a good place and a good, confident cash position because it's much easier to raise money when you don't need it. All of those things I've learned by going through this excruciating, painful process in the past. So you're asking how it was a delight. I'm not afraid of raising money anymore. I really don't. I'm not like, that's not what gets me excited in the morning. I'm not Adam Newman from WeWork. This is not my core competency. Like Dog and Pony Show is not what I think I was born into. But that said, I am enjoying it these days because I get to see what the market thinks about me. And I love truth, whether it's convenient or inconvenient. I get to be in the market and showing what we build and talking about the weaknesses. I talk about it first usually these days and it's fucking awesome. I like raising money. And so, if you're asking me how it is, I think it's very hard in the beginning. When I advise investors today, or when I invest in companies and startups today, I work with them on fundraise. And I tell them, like, first of all, it's a numbers game. You're going to get, let's say, an 80-20 rule. You're going to get 80 no's for 20 yes. And it might actually be 80 no's. It's not like it's going to be 5 no's and 1 yes. It's like very likely to legitimately be like 40, 50 no's. And the process of raising money is extremely educating. You learn a lot from it. You learn about yourself. How do you deal with objections? How do you deal when people point you to your weaknesses? How do you take feedback? How do you balance having conviction, which you have to have, and hustle and grit, and like you say, the optimism and never give up attitude with actually, you've pointed out something that I didn't see before. What are the metrics that you're looking for? What is the pattern of success, that image, that the pattern recognition you're looking for? And having that balance, I think is very important in life and extremely important for an entrepreneur. So I think it's great. And I like the process and I think it's very educating. And I actually recommend every entrepreneur, even if you're bootstrapping your company, to go through that experience. That said, I think if you choose to bootstrap your company, it's a very interesting experience as well. I haven't bootstrapped a company completely from scratch, but I think I may actually dabble in that in the next company because you have the second part of your question I think was about the pressure that comes together with raising money. And that pressure, that artificial pressure to be on some sort of a timeline is not helpful. Because when I raised my seed round, I had this thought that I have to continue the momentum that I had in order to then raise my Series A. So, like, I continue with the services, I continue with building the product, but also selling it at the same time. And it was unnecessary. In fact, I should have been comfortable pausing, saying, great, I did what I needed to do to get the first 1.5 million in the company. Now I can take a breather and build the right product. Take some more time to build it and launch it. properly versus continue the same cycle that was on just because of inertia. And same thing goes to scaling. You raise a Series B and everyone expects you to double in size. And guess what? You don't double effectively. You're not optimized. You're going to crush the culture. You're going to crush the bar of the employees. It's going to bring in a lot of complexity and bottlenecks and overhead. And no one tells you about those things. And the percentage of companies that this is a good fit for is small. The vast majority of companies need to grow between organic and blitz scaling. I'm not saying grow 5% and year over year. That's not interesting. I didn't sign up for that either. But you also don't have to always try to grow 100% year over year, 150% of the year. We grew one year 250% of. You don't have to do that. There is some balance. The beauty in bootstrapping or in raising a little bit less money is being a little bit more of a master of your own domain and having the ability to say no to dogma that is sometimes exactly what it is. It's not true. It's a made up kind of stories that came up in your industry because you read too many articles from TechCrunch or because you think that every company is a Zoom communication or every company is Salesforce, and it's not. And so that's how I think about it. I think it's a great experience. It grows you as an entrepreneur. It shows you how to balance the conviction and being coachable. It shows you your place in the market, helps you work on your psychology. All of those are blessings. But then there's price you have to pay for it too, which is you sometimes try to fit into a pattern that is completely artificial and doesn't fit your actual character and the DNA of your company. And that's a shame because many companies die for no reason because of that. They are trying to fit that DNA. In fact, if they took a little bit more time, I'm not saying 10 years, but take another year to build the right product, to try to understand your product market fit at ease, take a breather, and understand your sustainability, it will actually help you build a much better companies. And all of those investors will get a better return for their money. So it's a little bit more patience, but I think there is something to say about that. And when I look sometimes at bootstrap companies, it's cool to see it because they did have a little bit more time to think about the growth and did have the pressure to fit an artificial pattern.